Hi, this is Michael Yardney. Now, Australians love to talk about four things: football, the weather, property and interest rates. And right now, what's going on with the property markets is top of mind for many Australian investors. You see, over the last few weeks it's become obvious that the tide is slowly turning from a seller's market to a buyer's market, and many people are asking, is this the beginning of the end? 6 interest rate rises, lower affordability, fewer finance approvals, concern about overseas economics, more properties for sale than last year, they've all combined to slow down the boom we've been experiencing. So is this the beginning of the end? No. In my opinion, it's the end of the beginning. Now, not being smart with words, after a year or so, we have now completed the first stage of the property cycle, and the markets are behaving normally. You see, every property cycle begins with something real, something fundamental. And last year, it was pent-up demand from home buyers who'd put off their buying decisions because of the global financial crisis. The flame was then ignited by historically low interest rates and the first homeowners boost, which turned out, I guess in my words, to be a second or third homeowners grant, as many of these first home buyers went out and they borrowed $40,000, $50,000 more dollars and handed it over to the elated vendors who then spent more on their next home. The markets then boomed with what seemed like to be an insatiable appetite for real estate, from homeowners wanting to upgrade their homes and from investors who'd now regained their confidence and took advantage of the low interest rates. The latest statistics show that some of our markets performed very, very strongly over the last 12 months. And while the overall performance is still running strong, there are signs that finally demand is starting to be satisfied. Now, of course, the media is jumping on these signs like falling auction clearances, and they're writing spectacular headlines, and the doomsayers are out again saying the property bubble will burst. What do I say to this? I guess many in the media have forgotten what a normal market is. Look, only 18 months ago we were in the depths of a financial crisis that was touted as the worst since the Great Depression. Remember those headlines? And more recently, auction clearance rates were over 80% and booming property prices caught the headlines. Neither of these are normal markets. Now, to be honest, I enjoyed the last year when the value of many of mine and Pam's properties went up much more than 20%, but I knew this couldn't last. In fact, I didn't want it to last, otherwise we would have been setting ourselves up for an almighty crash. So what's next? The markets are going to enter the next stage of the property cycle. So after the initial strong rise, the markets are going to keep rising, but more slowly and more selectively. The same fundamentals that underpinned our property markets last year are still in play. We've got increasing demand from a rising population, insufficient supply to meet this demand, and if you add to this the strong economy, rising building costs, low vacancy rates, and virtually full employment, we've got the fundamentals to support a healthy property market. But despite these strong fundamentals, in the short term, it looks like it has become more difficult for some buyers, particularly the more price-sensitive buyers, to obtain finance or service their loans. We're already experiencing a two-tier market. While the overall median prices are rising, in each city there are winners and losers, with some suburbs increasing in value and others, lots of others, decreasing in value. Our rising interest rates and property values will affect different markets differently. Affordability will become a problem in the outer and first home owner suburbs, where wage growth is pinned to something like the CPI. However, in the more affluent suburbs, affordability will not be much of an issue. People living in these areas will have more disposable income, and they're nowhere near as dependent on increases in average wages to increase their affordability. You see, many run businesses, own investment portfolios, receive bonuses, so they've got much more disposable income, and their ability to pay more for their home, the home of their dreams, is not as limited. Now, hidden amongst all the bad news in the media recently, there was some really good news from the Reserve Bank, where the Governor said the RBA believes the Australian economy is set to grow strongly and that the optimistic assumptions underpinning the federal budget are sound. This should give comfort to those who are worried by many predictions of economic disaster. Now, if you pick the headline-seeking doomsday brigade against the Reserve Bank, I'd believe the Reserve Bank any day. Our research suggests that we're probably going to get somewhere between 6 and 10% growth per annum in some of our capital cities. But the markets are going to be much more selective. So what should you do now? What should an investor do now to take advantage of this lull in the market to buy the type of property that you had to fight hard for a few months ago? Currently established 1 and 2 bedroom apartments make great investments, especially those with good floor plans with an element of scarcity and the ability to add value. But you can't just buy any property. You've got to buy very selectively in suburbs in the upper price ranges and buy in general above and medium price properties. Now, I know this is different advice than what many other people are saying, but think about it. If you do what everyone else does, you're going to get the same results everyone else gets. And we know most property investors never get past their first or their second property. Now, I'm going to keep you updated with how to take advantage of the changes in our markets in future market updates like this and in my property update newsletter. But it's probably appropriate to remind you that in these changing times like we're experiencing, no one can quite help you like the independent property investment strategist at Metropole. Remember, we've got no properties for sale, but access to every property on the market. So if you'd like to find out a bit more about what's happening in your local market and what our research suggests is in store for us, please join us at a free property briefing in Melbourne, Sydney and Brisbane, at our offices or at our associate offices in Perth. Just click on the link below to find out more and reserve your place. Now, if you want to educate yourself a little bit more, please read my fully updated 3rd edition of the best-selling book, How to Grow a Multi-Million-Dollar Property Portfolio in Your Spare Time. I've got a copy of it back here at the back of my study. You probably can see it there. And this is, over the last 4 years, it's become one of the most popular property investment books. It's become a classic. And this new edition is going to give you updated strategies to take advantage of the new property cycle. So please click on the link below to find out more about it. Now, in between these fortnightly updates, I'm going to keep you up to date on what's happening in the property market in my new blog, so you should be able to link to it at the top of the page here, where you can follow what my thoughts are, or you can follow me on Twitter. Look forward to sending you another property update in 2 weeks' time.